A big wave of dollar downside pressure coming into play with a key level being taken out. Growing economic fears around the US economy with key CPI data this week. How is the dollar going to react, guys? Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So guys, this is our worst weekly sell-off that we've seen for the greenback for a long time. The dollar's dominance, the dollar's status as king, as I was calling those weeks back, has changed. Guys, it's very important to notice why we have our fingers on the pulse with the fundamentals, because fundamentals and macroeconomics are constantly changing. Things happen. Things crop up that are not seen. Okay? And markets will run with whatever narrative they want to run with. Okay? And right now, there are concerns, and narrative for markets is concerns, growing concerns around the US economy. With all these tariffs, 1 minute they're on, next minute they're off. And then, when analysts are starting to look at, and big players are starting to look at, is the US economy a stable place to put your money? With arguably what's happening with Trump, he's making the US an uninvestable place right now, given there's so many question marks about the implications of these tariffs, okay, on the US economy, because it's not just Trump placing tariffs on Canada, it's not just Trump placing tariffs on EU, Mexico and all that. It's the fact that these guys will retaliate, and they are retaliating, okay, not to forget China. It doesn't just have an impact on those other economies, it has an impact on the US economy. So it puts a lot of question marks and worries as to what's going to happen with the US economy as a result of all this trade war. It's certainly causing instability, right? And this is what I mean. This is the narrative that the market's running with. Allied with, we are getting a little bit of softening in US data, which we'll take a look at in a moment. But if you have a look here at the greenback, that key level that we were watching for the Dixie for quite some time around this mid 106 region, big wave of downside pressure. And I'm sure obviously a lot of people that were long dollar, there were a lot of stops at that area, hence why I was noting it. It was big, right? You can see where we had that bounce last week, staged a bit of rebound, but a wave of downside coming through, stocks being triggered to the downside, exacerbating that move south. Okay. One thing that didn't help before we look at this week was when you look at last week, okay, all focus was, of course, on the key labor market data. When you look at non-farm payrolls, okay, slightly softer on headline. Previous also revised lower, not good. The unemployment rate jumped up to 4.1%, bearish. The average earnings was softer at 0.3%, obviously in line with expectations, but softer from the previous. The previous was revised down to 0.4 from 0.5. So all of this is arguably deflationary. We're seeing some cooling. Less people, less jobs being created, higher number of unemployment, wages coming down, is all feeding into that potential narrative of a bit of a slowdown. And with that narrative, increases expectations for rate cuts to come. Remember how, early part of the year, late last year, we were talking about no rate cuts for 2025. Now we're talking about rate cuts again. 2 to 3 rate cuts are being priced in from markets. So this is obviously a dollar negative. Now, if we look at the dollar here, before we talk about this week, we've taken out that key level there at the mid 106 region. We've taken out a key level here around the 105 area. When you look left, guys, what are we looking at here? A return into that 100 territory. That's the next major area of safety, okay? We'll have a bit of support probably at 102. That gives way than 100. Okay, we're going to go and test these lows, part of this range. Remember this range I was talking about for quite some time? This range here, we're going to come back to the lower part of that range. That's where the next major area of safety is. Now, what could help that on its way is if we do get this week all attention on CPI data. What could help dollar on its way if we do get these lower numbers? Now, markets are forecasting that we get a cooling in inflation. It wouldn't be surprising given some softening in economic data points, softening in wages, softening in jobs being created. So perhaps then there's less stimulation going on to see prices of goods and services start to cool down. Okay, now we're looking for a cooling across those CPIs and the PPI figures as well. As you can see here, general expectations is for lower numbers, which would see that dollar heading to the downside. Now, if we look at obviously the dollar's pair, the euro, obviously largely taking advantage at the moment of the dollar weakness. Okay, and this big correction, a big flip side to the Dixie. You got to remember we had the ECB rate decision. Now, they are still gradual with rate cuts. They're not going to be rushing to cut left, right and center because they still have the issue of trying to bring down inflation. Inflation is still a bit sticky, so they want to take things gradual in that sense. Now, we've got a big area of supply here at 109. Okay, given that big bullish candlestick last week, it does look like the bulls will want to try and take that out. Obviously, we came into a little bit of rejection there. But if we're able to take this out, guys, there's no reason, when you look left, there's no reason as we can't replicate this bull move here and push all the way back into this next major zone. in towards 112, 111 in towards 112. So you'd be looking at 109, a bit of resistance at mid 109 region, then 110. It's the round numbers really. And then we should have a clean run in towards that 111, 112 territory. Okay, so the euro taking advantage of that dollar weakness. So the dollar does remain vulnerable right now. Volatility also expected for the Canadian dollar. We do have the Bank of Canada rate decision where we're expecting them to cut. As you can see here, expectations are for them to cut by 25 basis points to 2.75% from 3%. We know we've been going over this in previous weeks. We've had our finger on the pulse with that CAD. Just with dovish Bank of Canada, Canadian economy has been softening, worsening, generally speaking, in the labour market. When we look at last week's figures for the labour market, the unemployment rate actually held steady at 6.6%. The employment change wasn't great, only 1.1 thousand jobs there, much less than the expectation of 19.7 and lower from the previous of 76,000. Now, the thing is, what we're expecting with this decision is it could be a hawkish cut in the sense of they cut, obviously, as expected, but they sort of pause. Okay, why? Because there's still a lot of uncertainty as to the implications of these tariffs, if that's going to cause inflation, the uncertainty there. So the bank kind of may want to wait and see initially how this sort of trade war situation plays out. When we look at dollar CAD, obviously it's very bearish there on the monthly, right? With this candle here, we had that initial weakness of CAD because of the tariffs, and then their pause, and you know, it's a circus to be put it quite frank into a nutshell. But it still looks vulnerable. Looks like we want to fill this week of February. Okay, on the weekly there, obviously we'd run into heavy supply at the 44.50. I mentioned this in a previous video, that 44.50 area. Big rejections coming into play there. So keep an eye. If I give you a couple of scenarios, obviously, look, if the Bank of Canada do perform a hawkish cut and they signal that rate cuts are paused for now, then obviously this area as well will be eyed for maybe we form potential double top there, get rejections, and then come down and challenge the lower part of this range. Okay, obviously if this lower part of this range is 42 area gives way, the next major zone, you can see it yourselves, guys, it's 39.50. Okay, if it's the case that they're not, it's not a hawkish cut and they signal more is still coming, you know, we're not done yet, then you'll be looking for a break retest here, 44.50, and we'll go and challenge those highs. I am leaning towards the downside scenario playing out, just because of what I mentioned, the former points that I mentioned in terms of the inflation that could be caused from tariffs, the uncertainty there. They may just want to wait and see. But it looks like, given the monthly, given the weekly, given the growing loss of dominance for the dollar, the bearish momentum picking up pace, dollar CAD could be on its way to the downside. But this one is a little bit more of a tricky one in comparison to euro, just because of the greater uncertainties right now surrounding the Canadian economy. Obviously, we have the tariffs potentially of Europe, but there's a lot more uncertainty of Canada. So it may be a little bit more tricky because against the dollar. But against other peers as well, I think CAD still remains vulnerable given the uncertainty there. So keep an eye on that Bank of Canada rate decision this week. And last but not least, GBP, the Great British Pound. We do have GDP data eyed from the UK. Now, GBP is actually performing pretty well relative to its peers. Why? It's performing relatively well because obviously, look, it can be indirectly exposed to tariffs, and Trump could, you know, one day announce some tariffs directly on the UK, but they're not so much in the firing line at the moment. Obviously, we've seen Canada, Mexico, China, EU, but not so much GBP, obviously UK. But UK, as I say, could get hit indirectly, okay, as a result of tariffs on other people. Now, GP, obviously taking advantage of this dollar weakness. This week, though, we're going to be locking our eyes on GDP data. Now, in the last reading, it jumped up unexpectedly to 0.4%. Expected to cool this time around to 0.1 on a month-on-month. Okay, I think that number's quite pessimistic. I think there's room to be optimistic and see a surprise to the upside. Okay, UK economy is on the verge of stagflation, where prices are high and growth is not the best. It's a little bit low, but it's still holding up relatively well. I know the Bank of England are pausing at the moment. They don't want to be rushing to cut rates because they want to bring down inflation as well. Inflation's still sticky, wages still high in the UK economy. So the UK economy is still moving okay. All right. Now with GBP, it's bullish, right? GBP versus the number of peers is bullish, right? When you go and look at the likes of GP Aussie, we had a big rise last week, GP CAD, GP NZD, there are a lot of GBP pairs that look attractive to the upside. If we look at the Baker case versus the dollar, obviously a great weekly performance there, strong, you know, from 126 up to 129, 300 pip rally this week. Look, we've taken out a key area here at 129. As long as this holds and we remain comfortable here, okay, there's opportunity that we could sort of dip by around 129 into this mid sort of 28 region, and then take a stab into 130. It's what I've been eyeing up last week for a stab in towards 130. Replicate these moves here, these moves here, as you can see, that's the next major zone for GU to have the freedom there. Obviously, if we end up taking it out, obviously fast forward, next major zone would be up here at 132, okay, into that 132 territory. But let's focus on 1 week at a time, okay? 130 is sort of in the sight of the bulls, so long as this GDP data impresses, okay, beats expectations at the very least. And of course, we see that continued dollar weakness. So once again, another week, I'm sure, is going to be filled with exciting volatility, news headlines, economic development, all that good stuff. Have a blessed and amazing week, and I'll catch you on the next video.